In today's video, we're going to be taking a look at the Heikin Ashi trend reversal candles and how we can accumulate by scalp trading using Heikin Ashi and the exponential ribbon. First of all, we're going to take a look at the price today, and in my previous video I spoke about the price breaking this support line. There were two scenarios. One would be if the price went up, and the second scenario is if it broke this support, which was sitting at about 18 and 19 satoshis. So it did break the support line, and as I said in my previous video, that the price would likely come down to a new support line on the Fibonacci chart, which is around about the 78610 mark, which it did. It came down, and exactly on the line it bounced. We can take a little bit of a closer look. I can just show you, maybe also going to a lower time frame, and we can see that the price actually came down and perfectly bounced off the blue Fibonacci support line, and we've seen a small move up on the actual price itself. Looking at the previous history, we can see that we haven't really seen this type of a scallop pattern for quite a while actually, and this could be a good sign. I can't say 100% sure, but it could be a sign that this is possibly the bottom, and we could see maybe some more consolidation at this point over the next few days, and then possibly a small increase in the price as we go forward. Okay, just a quick look at the Bitcoin price. We can see that Bitcoin also, it did, over the last few days we got a nice buy signal, which the price at the moment is also, looks like we're consolidating at around 58,000. It's been holding this price, this level, for the last few days, so we'll see what happens in the next few days with Bitcoin. Okay folks, so what we're going to do is we're going to move on to a very simple strategy that I'd like to show you all. A strategy that I use quite often when I'm scalp trading, and it's a very simple strategy that I use, and I use the Heikin Ashi candle trend reversal candles, and you can see that. And I'm going to show you another chart, because at the moment the spread between, if we have a look at the, I'll just show you 1 second. If we have a look at the spread between the buying and selling order book on HitBTC, you can see that it's very small. We're moving, the price is moving between 15 and 16 satoshis, which is a very small spread, and it's great for scalp trading and when the price is in consolidation phase. So let's have a look at the strategy and see what we can make of it. So we're on the 1 minute timestamp, which is perfect for scalp trading, and scalp trading is it's perfect for traders who want to try and accumulate more G999 coin, or any coin for that matter, but specifically the G999 coin, if you want to try and accumulate without bringing in any new money. So this is a perfect way to do it, scalp trading. Okay, so let's see if we can plot some entry and exit points using the 1 minute chart. And I'm not going to go too far back. We'll use this chart, this time frame that we have here, and see if we can find some buy and sell opportunities. So what we'll do is we'll make a few marks. We'll start there and say, okay, there could be an entry, exit, entry, exit, entry, exit, again symbol, again an entry, exit. And we can work our way through. We can see that there's been quite a lot of opportunities for scalp trading if one knows how. So all of these are enter, exit, enter, exit, enter, exit. And if we walking with the market, because one can say, well, it's easy to kind of plot something that's already happened, but let's have a look. If we were moving with the market, walking with the market right now, then we could see there was an entry point in this area roundabout. We would have exited there, and now we would be possibly looking for a new entry point. So keeping in mind that we on the 1 minute time stamp, so every candle, every 1 minute a new candle will appear. So you know, this is for people that have got a bit of time, day traders that have got time to sit in front of the computer and focus on what's happening. You've got to spend quite a lot of time staring at your screen, which is probably not for everybody. But as I said, folks, this is a great way of accumulating more coins without bringing in any new money. So if we were walking, as I call walking with the market, we'd be now looking for another entry point. So if we can already get our dots ready for the next entry point. So if the price came down, we would enter again, and then obviously wait for the price to go up as well, to exit the market again. Now, just looking at what type of profits we're talking about here, we can also use one indicator before we go on to the exponential ribbon. And what I do is I'll put in, let's say, let's just bring this a little bit closer like this so I can get a bit in. And we say we put the regression channel on here, and we go from there to the end, and we go straight in there. And you can see there we've got a channel that we can work in between. So we're bouncing in between the channel as we're moving along. And now this is where the exponential ribbon comes in. For those traders that know the trading view, has got a built-in, very good built-in indicator. It's the MA exponential ribbon, moving average exponential. If we add that to the chart, then we can see clearly how even the dots, the marks that are made, the entry point, are absolutely perfect. So for scalp trading, you can see enter the market, exit the market, enter, exit, as we go, as we're trading the coin. So this is a very simple strategy to use. You don't have to be too experienced of a trader to be able to use this strategy with pretty high success. As long as you're trading, remember, never trade with more than 5 or 10% of your total margin, just to be on the safe side. And if you're having a look at the FTC order book, you can see people are trading, some people are trading with very few coins, and then there are other orders of between 4 and 6,000 coins would be a safe amount of coins to be trading with if you scalp trading. And coming back to the chart, and I'd also say that looking at this chart, if we try to see what type of percentages we'd be looking at, then you would see they wouldn't all be the same. But if we just took from there to there, for example, you can see we're looking at 3%. Now, it doesn't sound like a lot, but if you are trading over the course of maybe 5, 6, or 7 hours during the course of the day, and let's just take a look and see if we put a line from there. Let's say we started trading during the day and we traded to where we are now. We're looking at about 11 hours of trading. Okay, so I'm not saying everybody must sit in front of the computer for 11 hours, but even if you did half of that and trade possibly for 4 or 5 hours, you could still be able to get in quite a good few trades. And if you're looking at an average of between 2 and 3% per trade, you know, at the end of your session, we're looking at, let's count them, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So, you know, 7 times 3%, you already, you know, it all adds up. It really does all add up. And if you are consistent with your trading and trading a little bit, a few hours every day, you know, over the period of a month, you could accumulate a fair amount of new G999 coins without having to spend too much new money, bring too much new money into the model. Okay folks, well, I thought I'd just share this quick little strategy, simple strategy, for those of you that would like to try it. If any of you are looking for any more information, then just leave a comment in the section below and I will get back to you, try to help as best I can. This is specifically directed at the G999 community. Okay folks, well, thank you very much for watching today's video, and I'll see you all in the next one.